Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Hantech Markets. Each week I'll take you through the key events that I believe will be driving your investments in the coming days. Certainly moving into this week, the horrendous terrorism attack on the Malaysian Airlines flight MH17 remains high up on the list of factors of concern for investors. Now, how is this terrorism attack going to play out on the markets? Well, certainly at the moment there's a big flight into safe haven assets by investors. Assets such as gold, the dollar, yen are all benefiting, also treasuries at the expense of assets such as equities. Now, in terms of the politics of the situation, Vladimir Putin has been increasingly called upon to act in terms of trying to defuse the situation, and he has apparently today come out and said that he's going to do everything to sort out the events in eastern Ukraine, but they continue to remain of paramount concern for investors. And actually whether these words are actually going to be backed up with actions remains to be seen at the moment. So I think it's going to be an ongoing situation for investors. Now, how are we going to be playing this? Well, I think over the next coming days, I think there's going to be still this safe haven drive for investors, and it's going to be continuing to dominate, I think, for the next period of trading. Through this week, you've also got a lot of US companies now coming out to report. Some of the biggest companies in the US are reporting this week. You've got the likes of Amazon, Microsoft, Caterpillar, Coca-Cola, and the biggest company in the world by market cap, which is Apple. So these are going to have some big influences on these equity markets, I believe. Now, in terms of the Forex markets, we've got to be looking out for all this yen strength that has been driving some of these Forex pairs at the moment. Certainly the euro has come under pressure in the last few days, and also a bit of dollar strength as well. So this has been playing out in the Forex markets. Not too much volatility, you could argue, considering such a fundamentally large event has hit the international financial markets, but still there has been some key movement in these markets. Now, euro dollar has broken that $1.35 key support, which now has opened up that key February low at $1.3475. Now, there's been a rebound back, but I think rallies are going to be sold into, and I think that anything around about that 35.75 mark, I think that will be used as a basis of a selling opportunity. In terms of cable, the drift lower on cable continues. When I say lower, it's more of a consolidation because it's had such a strong move higher, and it's now just consolidating this position above $1.70. I think there's a nice band of support between $1.70 and $1.7060, and I think that anything within that sort of band will be used as a chance to buy cable, because it looks like on a long-term basis it's going to still go higher. In terms of dollar yen, I said earlier about the yen strength that we've seen, and that's now come back towards a situation where the dollar yen has closed only for the second time in 2014 below 101.30. Now, this I think means that we're going to be seeing further downside in due course towards that test of the key February low on 100.74. I think that once again, I think rallies will be sold into, and I think any strength is a chance to sell in dollar yen, so I think there will be further pressure to the downside. Now, okay, so on to equity markets. In terms of the indices, the S&P 500 remains the stellar performer in these global markets. On the European side, the DAX, due to its proximity to Russia in terms of geography and also economic-wise as well, the DAX is a very, certainly in the past few days, has been badly underperforming markets. In fact, for the first time in 2014, the FTSE 100 is outperforming the DAX on a consistent basis. So that's an interesting turnaround there. Now, in terms of the levels that these markets are looking at, the S&P 500 continues to find support at higher levels, pushing higher. Looks like it's going to be testing its all-time high again this week, and that comes at 1986. In terms of the DAX, as I said earlier, it's under pressure. It's really testing this key support now at 9,600, and that's you've got three supports around that area. You've got the primary uptrend, you've also got the 144-day moving average, and also a key line of support as well. So multiple support coming in around that 9,600 area. So anything significantly below there, I think, will be rather a bearish signal. In terms of the FTSE, it's been struggling to break higher above 6,800, and it's not not too bad at the moment, but it's reacted fairly positively, having broken that primary uptrend, but still I think it needs to break back above that 6,800 mark for the bulls to get a little bit more of control back once again. Okay, so pushing on to gold. Gold, as I said, has been one of the key beneficiaries of this flight to safety that we've seen in trading at the moment, and that has pushed gold back above that 1,300 mark, and it now looks like there's a key support area between 1280, 1290. You've got the 144-day moving average rising and being supportive at 1293 now, but also now gold is trading around the 1310 mark, which also is the top of a little band of about $30 bands worth of support there. So I think anything that comes back in towards that band of support could well now be used as a chance to buy. But certainly I think on a longer term basis, gold is beginning to look a fairly better prospect, as that much more so than it has been for a significant amount of time anyway. Okay, so into this week, we've got a lot of key economic events coming up. Starting off with the US inflation. US inflation is always going to have a big impact on the dollar, so there's no real change there. 2% on the inflation data is what we're expecting, but also you've got some existing home sales data. Again, the housing data in the States has been improving of late, and certainly if it continues to improve, that will put further pressure on the Fed to tighten rates. Okay, so the big impact on sterling this week is going to be these Bank of England meeting minutes, and they come out on Wednesday morning. Now, this is the first time that Kristen Forbes has been voting on the MPC, but also we're going to get an expectation possibly of some dissension and move away from the consensus. It's been 9-0 for almost for about 2 years, I think, now on the Bank of England MPC committee, and there's possibly signs that the MPC could start to see some dissenting voices, so possibility there, so watch out for that this week. Also at the back end of this week, in terms of sterling, you've also got the second quarter growth figures for the UK, and they could show 0.8% growth, which is the expectation, and further improvement in the UK economy. And then on Thursday, the main factor which could again have an impact on risk appetite is the Chinese flash PMI data. There's also the Eurozone flash PMI data, but certainly the Chinese flash PMI data will have an impact on these commodity currencies such as the Aussie and the Kiwi. So watch out for them on Thursday. And then on Friday, we finally finished off with the German IFO and also the US durable goods data as well. So quite a lot to be packed in this week across all the economies. Anyway, I wish you good luck in your trading this week, and I will speak to you next week. Thank you.